You are listening to Mining Stock Education.
I'm fully vested in the junior resource sector, and that is a risky proposition. And so one thing I've become better and better at is taking profits out, not only to put them into cheaper things, but also put them into real things.
Congratulations on all the profits that you've probably been making, but just a friendly reminder, you're not as smart as you think you are. Thanks for tuning in to Junior Mining Insights, my monthly chat with my co-host and friend, Leni of JuniorStockReview.com. Brian, it's a bull market. There's a lot of newly minted junior mining experts all over the place on social media. Everybody's making money hand over fist. Companies that I wouldn't have touched 6 months ago, I've seen gone up 400-500%, and there's profits in everybody's accounts. And when this happens, when do we sell?
That is the question. And I think that's probably the single biggest question that I've been answering over the last 2 or 3 weeks, but especially this past week. I've probably had 5 or 6 emails just on that one topic. I think, it's very meaningful, especially for people that have been around the sector for, more than a few years or more than the last 9 months. Because if you've experienced the ups and the downs, I think that you come to different conclusions than many of the people that have only seen the sort of upside of the market. For me personally, I think it all starts with the buy. And for me, I will have a sell price or a price target from the very beginning of when I want to buy a company, and understanding the catalysts that kind of flow into where that price target is and sort of the timeline it is to reach those price targets. The thing that happens in a bull market that we're all experiencing right now is that you get price recognition before these actions or these catalysts even happen. And I think this is where you have to be really careful, depending on what those catalysts are and how they sort of contribute to the underlying value of the company. If it's a developer and most of those actions are maybe more related to confidence of resources or confidence in metallurgy or confidence in permitting, the recognition to me may not be as impactful as, let's say, an exploration company whose sole value is probably tied to the results from drilling. So if you can capture value before you even get to that question mark being answered, that's of course like the prime time to de-risk yourself and look at selling. The other component is if you've got a good handle on how you value companies, you're confident that you've got the education and the understanding of what's ahead and how everything ties together, then of course you can make decisions based off that value proposition. Again, if you're being paid before you even have to learn about what the what that catalyst is going to provide you, to me, those are perfect opportunities to take profit. And in each situation is going to look a little bit different. We're in a market today where the things are moving along with the precious metal price, something that wasn't happening a year ago, maybe 2 years ago, or definitely not 2 years ago. And so you have to have some sort of plan in place. And I think that's the biggest thing. And it comes down to understanding what you own, what's ahead, and how much risk you want to take by letting those profits ride. And, the first part of my investing career was based off sort of a buy and hold. And to me, that was a very naive way of looking at the market. And I learned that lesson after 2016. And I learned it even better after 2020, that profits need to be taken. My exposure as an investor, I'm fully vested in the junior resource sector. And that is a risky proposition. And so one thing I've become better and better at is taking profits out, not only to put them into cheaper things, but also put them into real things. Paying off your mortgage, buying a car with cash, improving your house with cash, very real things that I think so many people miss. And it's not until you get past this bull market, and whenever that is, whether that's in 2 months, 3 months, 2 years from now, you're going to look back and say, man, you know what? I should have reduced my exposure and I should have put it into real things that improve my life, and use this as a conduit for definitely improving and building your wealth, but also a way to build real things and real value to your family and your life in general.
So that's great advice. And it reminds me of what Warren Irwin, the fund manager from Rossau Asset Management, told me 6 or 7 years ago in a face-to-face meeting. He said, Bill, when you feel too smart, like you're too good at junior mining stocks, he said, sell, put it into real estate. Okay. And when everybody hates junior mining stocks, transition back into junior mining stocks. So what I'm doing when I'm seeing like this junior mining euphoria and like the backslapping and everybody saying, should I launch a newsletter? Look at my picks. Like, well, everybody's up. And sometimes the companies that don't deserve to go up the most versus some of the ones that are probably are more substantive. So in that situation, I'm just telling myself, you're not as smart as you think you are. And then I was thinking, if I was having coffee with a junior mining euphoria commentator right now, the single question I would ask them is, after they told me how their portfolio is performing, I would say, well, why is it performing well? In other words, it's a derivative of what you just brought up, where before you buy a company, you have to understand why you're buying it. And you also brought up, like, why is it going up? Is it marketing? Is it hype? Is it because it has gold in the name? Yeah, they raised $4 million to drill, but they haven't even drilled. But now you're at a market cap of $37 million. It was $6 million 3 months ago. You should be taking money off the table if that's the case, at least the money you put into it. And to think through, why is this going up? Is it marketing? Is it fundamental value? Or what has happened? Is it a neurology play to where there was a discovery nearby? And so this thing is going up just because there was a discovery nearby. And you have to think through those things and be able to explain that simply and quickly. Because if you don't, I'll tell you from my own experience, having had some 10 baggers in 2016, bought Impact Silver, this little, 95% down off of the 2011 high. That thing went 10x on me. First Majestic went 8x for me. And I'm buying all these things, but I gave a lot of it back in 2017 and 2018. And so, like, if you can't learn in real time why your stocks are going up and take a more sober view of even your own skill level, then you're going to give that money back. Even if it's not in this upcycle, it's going to be in the next bear cycle if you stay in junior mining stocks.
Definitely. Like, there are very few investors, and I would say very few, especially that aren't doing this full time, that can sort of adapt to the situation. I'll give the example. When I was in steel manufacturing as a manager, they used to teach us or talk to us about situational management. Every single person you're going to deal with is different, and you have to first recognize what situation you're in and who you're dealing with, and sort of adapt yourself to dealing with that person to the best of your ability. And again, that's self introspection. I think dealing with people can be super hard. And looking at my own experience, there were sets of people that I was very good at dealing with, and there was other people, no matter if I recognize it or not, that I wasn't good. And so there's that introspective side. But what I would say is that was my full-time job, and that's what I was basically focusing on every day. So if you say have a job like that, or any job 9 to 5, and then I'm doing this as a side thing, you're probably even less apt at changing your process on the fly, recognizing where you are in the market, whatever that even means. I know myself, I do this full time, and I know I can't predict where the market's going. The best commodities traders in the world hedge their bets. They hedge because they're not even positive, and they've got all the information out there about where metal prices could be headed, and they hedge. And they do that because they don't know. And so, you can lie to yourself and you can say, I'm going to do this, and the bear market will come and I know how to transition. And let me tell you, you probably don't. There's some guys out there that have been in this long enough, and they're very good at flipping and following momentum. And again, I'm not saying that it's impossible, but I think for the vast majority of people, you need to have a sort of a set of rules that you invest by, whether you're in a bull market or a bear market, and sort of stick to them to a certain degree. And that comes with the process of knowing what you're buying, understanding it, have a target, and actually execute when you get there. And most of the time, while precious metals is running and the momentum and everything tells you I should be buying more precious metals and buying more companies in this sector to leverage that alpha, I'm telling you, guys like Rick, and this is to me the mantra to sort of live by. You're either a contrarian or you are a victim. And while you can still have share prices move up after a bull market has sort of subsided, most of the time you're going to have to buy stuff that's that's of good value and hopefully hit that bull market somewhere along the line. When the precious metals is done, it's going to move to something else, and it's going to move to something else after that. And maybe precious metals next bull market move is in the next decade after that. So like everything moves in cycles. And if you follow value and if that fits your sort of investment horizon, that's sort of how you have to act as an investor in the sector, and get rid of the ego of associated with all the wins and the immediate success, the short-term sort of outlook.
So should management be able to sell? Management can recognize the cycles you're referring to. Their stock is up 800%, and you go into their SETI filings and you're like, oh man, this guy just sold $800,000 worth of his stock. How should that be interpreted? Should we give them the freedom to sell in this uplift?
I think, well, anybody can do whatever they want. Me personally, I want to invest in the guys that are in there for that end game, whatever that may be, whatever sort of thesis they've sold me on why I'm investing in the company. Like, we're delineating this resource and pushing it towards a construction decision where it'll eventually be bought out, or we'll build it, whatever that might look like. And so for me, I want to invest in the guy that, believes in himself, believes in the deal that he's constructing, and pushes that forward. The times where you have management, especially when the selling is on a large level, they're telling you exactly what they think the price of the company is or what the value is in the company. And that de-risking is acting like an investor. And so when it comes to management, I think there's a clear distinction between how an investor acts and how, a management or a management team that's trying to build something should act. And I think when you sort of think of it in those sorts of, from that lens, it becomes pretty clear that management should not be selling the positions that they have. Now, stuff happens in life, and whether there are divorces, there are the needs to buy cars and such. But again, like I would say the 90% of the people I've ever made money with don't need to sell $20,000 or $30,000 worth of stock to deal with how life treats them. They're making good money as the CEO or as some part of that management team, and that pays for their life. Whereas the money they have vested in the company is sort of that upside, what they're working towards, and as it should be. But things happen in life, and so I don't want to necessarily completely close the door to management taking money off, but I tell you, it does not give a good signal to the market. And then I'll bring up one example. This goes back, it's more than a year, probably about a year and a half. I'm invested in Orion Resources, and I've always been sort of attracted to the possibility of Rupert, Orion, that whole Lapland belt being consolidated at some point. And so I was definitely following Rupert, and it's a fantastic deal. But I can remember a set of directors selling their stock when it hit. It was like $5.50. I'd have to look back, but it was definitely over $4.50. I think it was in the $5 range where they started dumping stock. And in one case, I'm pretty sure one of the board members left, and that was sort of a sign that, hey, that's probably coming. But whenever you see that sort of thing, to me, it speaks to what might be going on in the company, especially when you start talking at the board level, which are supposed to be sort of the overseers, or and many people will coin it as like the parents of the company. When you start seeing them sell, or you start seeing management sell, there's obviously something going on. And then if you fast forward from that point on, you see the CEO, he quit or was fired? Who knows what that actually was. And maybe there was some dissension in the ranks. And so it speaks to maybe some dysfunction, which I think now is definitely, closed the gap with the new guys that they brought in the management team, and, it being a world-class asset. But to me, it spoke to something going on in the background and things not going exactly to plan. And maybe that's something investors can take into obviously investigate more and ask questions about it if they're seeing it. And from afar, this also might speak to opportunity into there might be a transition coming, and this might be an opportunity when the stock dips on that I can buy. So
I have a few reflections on this. I think it was Philo Mining, one of the directors, and I'm mostly accurate on what I'm about to say if somebody critiques me in the comments, but she ran a fund, and I think she made like $127 million on Philo. And I remember she resigned, and I'm sure she cashed out too. And how can you critique that, right? Like, after you've created value, you're getting to that exit point, like, you got to turn it into cash at some point, right? It's all on paper, even if it's that large of a number, unless you're able to turn it into cash. Then with the Barrick and the Newmont CEOs this week resigning or being let go of their duties, however you want to look at that, are they going to be able to cash out on some of their RSUs and their stock comp? Like, maybe there's a degree of where they were happy to be relieved because now that they can just cash out of their positions after gold's gone up, more than doubled in the last couple of years. So there has to be an exit point for management. I've had a small junior CEO tell me, Bill, I've worked on this thing for 8 years. And most of those 8 years, I didn't receive cash compensation. I had delayed compensation. He said, so when I hit these milestones, you're going to see me selling because I need to get paid for this work that I put in. And Brian, he was not somebody that was ultra wealthy to what you're talking about. So I have a soft spot for the guys that aren't ultra wealthy. They don't have 10, 20, $30 million in the bank account. So, they're hustling, they have maybe less than $1 million, cash. And so this is a huge part of their net worth, their control and their work with this junior. So I have sympathy for the guys, or the guy that works for a corporate, minor and then launches out with a junior because they see the opportunity and they haven't amassed the net worth yet because they haven't had that multi-bagger when they're in control of a junior. So those that are willing to hustle, take their skills, I guess I have a little more sympathy for somebody like that. If they're creating shareholder value, if they take a little money off the table along the way, I would maybe be a little more lenient than what you described.
Well, it's definitely situational to a degree. If you talk about Philo, there was a lot of money made on that, and typically if you've made a 10-bagger and somebody wants to, not no matter what management does, but I think everybody becomes more lenient to the actions of management or whatever happens with the company when you've made a ton of money. The other side is, I think, in particular with that story, is that they sort of were at the finale of where the story was, like with BHP and Lundin Mining's involvement. You could say that they sort of brought that company to fruition. It's not like, if you rewind back 3 or 4 years, Jamie was the CEO. I can remember talking to him and they were working towards something. They hadn't hit, that kilometer intercept of, a plus copper equivalent. You could say that them starting to sell then, well, why? Why are you selling now? Why are you dumping in or selling those shares that you've worked towards? Like, you don't believe in the story anymore. You don't think that the value is there, because if you think the share price is going to go up, if you think that you're going to execute on value, then why are you selling? Like, to me, again, that contrast between investors and management, if they're selling you like that, this share price is going to go up. Well, do you not believe it? Because if you don't, then maybe there's a problem there too for me as an investor that I need to be thinking at. Because if you think the share prices go up and I should buy right now, but you're selling, that's problematic. It doesn't compute for me.
Okay, to support that, the CEO that I referenced without naming, now it just came to me. I remembered this when you were sharing that. He said his broker put in a sell order very high. And for whatever, at this time, the share price spiked. It went up like 35% in a day. And then he sold at the peak of that day. And I remember when I saw his filing, I was at my kid's soccer game and I was like, what are you doing? Like, to your point, I was like, I've been holding your shares for this long, and then you're selling and you haven't even hit that milestone we talked about. And I remember that put a cap on the stock for months after that, to your point. So there is a balance, isn't there? And just the messaging that it gives to the market. Totally.
And like, I would even say, like, if somebody's taking, like, I've heard the whole adage of, like, sweat equity, and I'm not taking a salary, which is good or bad. But it's also, it sounds to me kind of dumb. Like if somebody has no money and then they're going to work for shares, it doesn't seem like a long-term viable way of doing things, because especially as a CEO and an investor, you know that the mining sector is so cyclical. And so you could be being paid in shares and hit the wrong part of the cycle, be doing good work, and actually lose money on your supposed compensation. So like, to me, as time goes, like, especially if this is more than a year, like, I would also kind of question the CEO is like, does this make sense for anybody for you to not take a salary? Like, I'm not against people making money. But like the times where I have the biggest problem is you have guys making $250,000, $350,000 as a junior mining CEO, getting $300,000 in options per year at good prices, and then selling. It's that makes no sense to me. Like, to me, situationally, I don't know how you ever justify those sorts of situations. Like, you even though life costs more than ever these days, if you're making $300,000 a year, unless you live a very lavish lifestyle, that should be pretty good. Like, I don't buy that you need to take 40 grand out to buy a car. First and foremost, you're probably buying $100,000 car, but I don't buy that. To me, it's like the management team acting like an investor. Of course, they want to cash in on things, especially if they don't believe their own jargon in terms of where they think the share price is headed. But it does become a reflection of their confidence in what they're doing. And I think people should take heed to selling and really investigate it, because like you said, there is some situations where I'm sure it is warranted and it's fine. But most of the time for me, it's a huge red flag that something's going on, and you need to better understand what it is, especially if it's the leader of the company, the CEO, or like a chairman or something like that.
Okay. And to further drive home this point, that we should not be feeling sorry for most junior mining CEOs. As I've understood and come to understand firsthand how Vancouver works as a USA outsider 10 years ago, these guys, even when they're in control of a company, they get all the cheap shares in a lot of the other juniors. So knowing the cycle, when they know they can't sell their own shares, I know of numerous firsthand examples where they load themselves up in cheap shares in some of their network deals. And those are, they stay below the reporting thresholds, and they're able to unload those and make millions of dollars doing it. Example, a year ago at Beaver Creek, not this Beaver Creek a month ago, but the year prior, a friend came up to me and said, so-and-so CEO of this company was pitching this new silver deal to me. And he said, yeah, I know. I said, because a month ago, I met the guy that had founder shares in that company, made a little profit selling it to that guy who put $500,000 into. So he didn't get founder shares, but he got just above the founder shares, large position, and that thing has gone up multiples since then. So he's made millions of dollars on that. Now that's not going to come across in any filing, but that's just an example of like, do you feel pity? No, because a lot of these guys, even if they can't sell their own shares, they're in other deals in which they can sell a lot of shares and make some big time profits.
Sure. Like there's so much that goes around when you're plugged in. And like, it goes back to not only these guys or being a part of the Vancouver sort of, I was going to call it syndicate, but being involved in the sector, you're going to get more opportunities. And I think for investors, that's why you need to go to conferences. That's why you need to sort of start your own network, because more opportunities come to fruition when you're plugged in. Again, like this is, I'll go back to like Rick did a presentation at Metals Investors Forum in January. And he basically said that if anybody who lives or is around Vancouver, like it's basically, I didn't say if it's criminal if you don't make $1 million, but you're going to make $1 million if you're plugged in, if you've got your ears open and you've got, half a brain to sort of execute on what you're hearing. And that's the reality of the sector, is like the more you're into it, and the more that you can sort of structure yourself and control yourself to buy and sell at the right times, there's a ton of money to be made. And for the management teams, there's no reason to feel sorry for them for not being able to sell. And especially if they believe in the deal like they say they do, or where they think things are headed, then why would you? Because they're going to execute and they're going to make the money for themselves, which ultimately that's what we all want to do, is be our own success and on our own back. And I think that's, you sort of have to hold that to them. So.
Okay. One thing you've taught me over the many years of our conversations is you can look at somebody if they're successful and you could say, that's skill, that's luck. But this third category that you've often brought my attention to is the fact that no, they're there because they came from a wealthy, connected Vancouver family, or they're there because their brother is so-and-so and they got the cheap shares and they made 800,000 or 1.2 million on this deal, not because of skill, not because of even ambition, but just because they were there in the room and they were basically fed it on a platter. Any more thoughts on that, Brian, or did you address it enough?
No, but that is like, the more you start to understand things, how people, come into success, and it feeds in, and this might even be kind of diverting, but like I was thinking, there's so many guys that want to claim success in this business. Like I was thinking the other day that NextGen and their uranium discovery was, I don't know how many geologists I've met that sort of claim that I was part of that, or sort of give you the innuendo that, that was me. And so I wonder, like, especially for the people that are listening that aren't sort of plugged in, and I even sort of say there, like, well, who is responsible, or who should I give the credit for, let's say, that discovery, or there's any number of them that these guys will want to talk about, because we always talk about management success, and that it's so important to, as a prelude to, or past being prologue, that these guys that are successful are sort of going to be continuously successful. And there's different scales of that, but then it does come back, because a lot of these guys, this is the funny thing, is like, a guy could be, and not to say that IR isn't an important part of a junior company, but the IR guy, you would hope, isn't like the main driver of value for a junior mining company, or if it's an exploration success or it's an M&A deal, that they are at the root of why the share price went up. But I've seen you have to do a little bit of digging, and some of those guys from IR have turned CEOs and are leading companies, and that's all fine and dandy. But when they say that I've been successful in the past, they're like, okay, well, what did you really do for that? Like, what was it that what role you played, especially now as your CEO? Were you the CEO? Did you lead the company? Like, what was it specifically that you were so good at that led to that success? And so, like most things in life, but definitely the junior sector, you got to dig more. You can't really take much of it at surface unless you're dealing at the very top end, like the Ross Beatties of the world or the Friedlands of the world, where you sort of know where those guys add value and that they've done it continuously over the careers, basically the stuff that they've touched and are actually personally behind. You have a much better chance at being right or profiting. So it's an interesting dynamic, because whether it's nepotism or luck, there's many people in the junior sector that are going to come out of Vancouver, Toronto, that have had some stroke of either, and sort of will lay claim, but it's going to be up to you to sort of decipher whether that's legit or real, and how it applies to what they might be doing today. And, again, the more plugged in you are to the sector and following this stuff, probably the easier it'll become to sort of, separating the wheat from the chaff.
All right. I want to discuss a topic of potential self-dealing or not fully acting in the best interests of shareholders. When it comes to junior mining executives that are on the board of, or executives of sometimes one or multiple junior mining companies, and they're posed a deal in terms of a deposit or a project that maybe has some historical workings on it, its perspective, and maybe the bull market for that commodity is lining up, and they're in control of these juniors, and being paid or compensated minimally by shares, but oftentimes by cash. And instead of putting that project into one of the juniors that they're in control of on behalf of the shareholders who are paying them, they then buy that themselves through their own entity. And then after doing that, sell that project into the public vehicle, oftentimes for millions, maybe even tens of millions of shares. And the question I have with that, the ethical question is like, shareholders were already paying you, compensating you. Why didn't you use the vehicle that they were paying you to operate and in their best interest and for their benefit? Why didn't you use that to buy it directly? Why did you buy it yourself and then sell it in? And obviously you can probably get what I think of that just by the way I tee this up, but your thoughts, Brian?
Yeah, well, you sort of answered your question or your comment. Clearly, there's an issue there, and it's greed that's at the basis of it, because you can make more money buying it personally and then vending it into one of your companies or some sort of arm's length company, whatever again that means. And it's not the way to do it. And the thing is, what I would say is, especially with the advent of so many podcasts with so many voices talking about the junior sector, I'm really surprised that guys think that they can sort of get away with that, with not sort of having somebody question it, because that stuff's becoming more and more clear that you can't do that. You can't so clearly do something opposed to shareholders' best interests. And or maybe
okay, Brett, let me challenge you a little. Okay, sure. The Bible says love covers a multitude of sins, but a bull market, Brian, I think covers a lot of sins of management too. Don't you agree?
Totally does. And that goes back to like the whole point of like when people are making money, they question less. And like that's almost where I was starting to lead, is like maybe it is just reflective of no matter how much information is out there and available for people, that when you're making money, or maybe just in general, the sort of laziness of investors allows people to sort of still take advantage of those sorts of things. And like, for me, like I know a situation like right off the top of my head right now of that. And I would say in my interactions with the guy, he's a good guy. Like I don't think it's necessarily, he must have some way of justifying it to himself why he's able to do that. And maybe he would tell you that, oh, I didn't think it was going to go into that company. It's something that I thought of after, or it was going to be a vehicle for some other deal. And that might very well be true. But I think when you're that connected to companies, there's no way you can sort of justify that sort of attitude. You have to do what's best for shareholders, and you have to do it through the company first. And you've already taken or are already taking your slice of the pie through a salary, through some sort of option deal, through being maybe the founder of the company. So you've already told the market, this is how I'm taking my slice, and you shouldn't be taking more. Yeah.
Any gold bull market reflections as we're in the middle of it? Like any feedback from your subscribers in which you maybe temper their euphoria? It's just, on the one hand, it's hard for me to watch some of the euphoria just because I know people are making mistakes, even though they're making money. They're making mistakes and money at the same time. But on the other hand, I remember what it's, the 2017 through 2019. I remember 2021, through to 2024. So like the pain of that, then it's like, oh, we're justified in this. But any reflections from your subscriber base?
Well, actually, I'll give you a reflection on what I'm seeing from the subscriber base and just seeing in general in the market. Is I think that it's perfect evidence of why you need to be a contrarian. I look at a ton of companies. I analyze value across the sector. I'm a bottom-up investor. While I have opinions on where metal prices are headed, and I'll have an opinion on that certain sector, like I said earlier, I don't really subscribe to the fact that I can predict where it's going. So I try to find good companies, good catalysts, good management, and those are the people I want to back. when you get into these bull markets, especially what we're seeing right now, you're seeing, when you start comparing valuations, it becomes quite clear that 90% of the time I should be investing in something contrarian to precious metals, because that's where the value is. And that's where this thing will eventually head. And that is not a bearish statement on precious metals at all. It just means that the likelihood of being right in terms of having that margin of safety, or, you know, picking something that, you know, hasn't already maybe exceeded its potential, is that much higher. So I need to go to copper. I need to go to nickel. I need to go to something else, to really find that value. And if you look back.
All right. So when we did our dialogue with, David Erfley in Beaver Creek, we had some comments, and some of the feedback were, what are these guys talking about? You know, capturing profits in the precious metals. Don't they understand this is a structural bull market? Don't they understand the sovereign debt levels? We could even be facing a currency reset. Like gold's going much higher, 10,000, you know, to the moon. So that was part of the pushback from just a couple. It wasn't like a large voice, but I did see those comments, Brian. Yeah,
totally. And then that's like the generalized, and that's sort of what maybe it was taking a long time to get to I would also say that it's that people haven't been around long enough, if that's sort of how they think, because you tend to give, if you don't have a process, and if you don't have an idea of when you're going to sell, if you think you're going to pick the top and you're going to pick the bottom, you're going to be wrong, and you will give back what you make. It might take a few years, but, you know, I think we all can sort of talk about mistakes that we've made. And so that's what sort of just reinforces that that's what you have to do. And also when they start talking about all the reasons why gold is going up, that's all very true, but it also speaks to the amount of risk that's out there. Like, should it surprise anybody if the market crashed? Like if the debt load, if the spending, like them lowering interest rates tells you about the state of the economy. And the fact that, let's use the US as an example, are paying over $1 trillion to service their debt. This is problematic. This is not a good situation. And so while all those things might be true, and the gold price going up further in the future might be true, and I would agree with it, I don't know how you can sort of not take profits, not only to put it into other things, but to just de-risk yourself, because this thing could crash at any time. And what would be a better opportunity to buy those things at today's price, or buy them at a 50% haircut? You know, and like we've seen, I don't see society changing what we ask of our politicians. Society wants politicians to continue to print money, to lower interest rates, and to prop things up. And if it did crash, that's terrible, because there's going to some people that don't do well because of that. But in terms of the resource sector, to me, looking back on the history that we've seen just over the last 15 years, it goes down, and then they will flood the market again with liquidity, and the market will go back up. And for those that don't have the cash to execute, you're going to be sitting on the sidelines and either emotionally capitulate into the fear in the selling, or you won't be able to do anything. And again, these are all your own choices, and you have to come to what's going to work for you. But for me personally, the experiences I've had, the way that I want to deploy money into the sector, I have to take profits along the way. And it has as much to do with each individual company as it has to do with what I see in the broader market. And so it's not necessarily a rule of thumb, but again, for people that aren't doing this full time, maybe it should be. Maybe you should be saying, I'm basically going to sell half on a double and just let this thing ride. And that becomes much easier if you've protected your principal and your profits are really what you're playing with in terms of how much I'm going to make, instead of if I'm going to make money at all.
And a lot of guys, Brian, multiple guys I talked to that understand how the cycle works, they said, Bill, when you capture those gains, move it out of your brokerage account. Because what's going to happen, you're going to see that big wad of money sitting there in cash in your brokerage account, and you will find a way to put that back into another stock. So if you come up with your approach to what percentage you're going to have in cash, or when you take profits, move it out of your bank account, and don't have a quick ACH or wire capability right back into that brokerage, or make your wife, your accountability partner so you don't spend it too quickly. I've had multiple people tell me that.
It's sage advice. It's sage advice. And it's something I've gotten better at over time. And the 2020 bull market I made the most money to date. And I think I've actually made more now, in this sort of end of 2024 to today. But prior, it was the biggest financial year of my life. And I think at the time, do a good job of extracting some of that money and putting it into real things. But then in retrospect, again, I was sitting there in 2022 and it's like, I didn't do enough. And you're absolutely right. When you have that chunk of cash that's sitting in your portfolio, you will unfortunately, and I say that to be more negative on purpose, find a place to put it. And so very often, again, another thing that I've learned is that I'm better concentrated. I'm better with fewer positions, and trying to find something just to fit what the market is showing this momentum, again, can be very problematic to overall success.
Brian, I wanted to ask you about site tours. You, of course, have your site tour video series, Field Notes with Brian Leni. You also go on many site tours that are not in that series. I was on a site tour for a company that I own earlier this year, and the asset as it's being talked about on social media, people are very hyped about it. But having gone to it, even though I'm still an investor in the company, I don't value that asset at literally a fraction of what I see people chattering about. I throw that out for a discussion point. What are some of the intel that you've gotten at site tours that conflict with what you see on social media or the chat rooms? Or what is some of the intangibles or tangibles that you notice when you're there that you'll never pick up from a presentation or discussions or even a conversation with another investor in the company?
So I'll preface this with and it's just me personally, and to my detriment, I'm not sure. I only pay attention to a certain segment of voices out there. And so I wouldn't say that I can correlate site visit misconceptions with market perception necessarily. But what I'll say is
you're the price to value differential guy, right? Come on.
But what I mean is how I look at the site visits is basically let's say the last one I had in Newfoundland, where it was at basically a brownfield site where this company bought the project, the mine, out of bankruptcy, and in the 2 years since have subsequently built this into something I think is going to be a mining operation in the future. And so when you get to visit these places, you get to see the proximity of infrastructure. When they're talking about a power line, it can be very obscure to think about something that's 100 kilometers away, 200 kilometers away, versus going right through site or going right past the mill. Or when you talk about road accessibility and what that means to the labor force. Does this mean when you're in Newfoundland, and these small communities are actually a 15-minute drive away, and their labor force, while they do have a camp, most of the people when the mining operation starts are going to live, within 15 or 20 minutes, and it's very drivable. Other places might be an hour and a half. And I know there's a segment of people that drive into Toronto, or they drive into wherever you're from. I'm using sort of where I'm from. But how drivable is it actually? So when you fly into these places, unless you're staying at camp or even if you're not, you can sort of see the accessibility of that site. And especially if you're talking on the base metal site, infrastructure matters so much. Am I driving to site, or do I have to be helicoptered in? These are different perspectives that you only get, I think, and you really think about when you're experiencing them. And if you put yourself in the labor force, or if you put yourself into actually sort of realizing the cost associated with visiting that company or doing work with them, these are the things that site visits reveal to you. And the other thing is getting to know people better, like management teams. Again, social media, a lot of misconceptions, maybe on the negative and the positive, to management teams and what they're like. Getting to spend 2 or 3 days with them is sort of what I would call an X factor into understanding the person that you're dealing with. And again, if there's any misconceptions with yourself or anybody else, this is probably the perfect time for those sort of to be revealed. And I would say that every time I've had a personal interaction with companies that I want to be heavily invested in, or am heavily invested in, it usually is on the very positive side of making things more concrete into, yes, my assumptions or my general thought of who this person is correct. And that is fantastic. And I'm that much more confident, in supporting the company and sort of, especially in my circumstance, talking about them publicly. So that's what site visits do for me. And the other side, again, this is outside of your topic, but I particularly like when I do site visits too with other newsletter writers or analysts or other investors
to listen to their questions.
It's amazing where conversations go, and people have such different experience and perspectives. And like I would say, like let's say this last Metals Investors Forum that I was at, which was very good sentiment. It was very happy that I got to present there. The conversations that I had really, again, opened up my eyes to the sort of back parts of how deals get made and the people that are involved in deals that you really, if you're superficial to it, you don't fully understand. And again, I hope this is not too vague, but I'm just trying to bring across the point. Like for me in particular, I saw how this one guy was more connected to a deal than I thought, that I'd sort of discounted superficially because of some of the people involved. But when I knew, or if I found out that this person was on the background of this deal being made, I thought to myself, wow, you know what? I need to give this more thought and not just dismiss it. Which, if I didn't understand this, I still think that's sort of the right thing to do. I've been experienced enough and had enough losses to know that there's certain people to an extent I should avoid. But in this particular deal, I don't think it's the case. And I'm actually quite interested to see what else I can dig up. So that was a big point for me. And that's, again, self-reflection into how I might be wrong in how I process things in a general sense. And so anytime you can challenge yourself and see where you're wrong and maybe where you need to tighten up or be better is phenomenal. And that's outside of the bull market sentiment and the good things or the smiles on people's faces that you saw around the conference, which are great to see.
So you've taught me that the two people you like to look at in a company are the CEO and then the VPX, the Vice President of Exploration. So like on a recent site tour, when I was with the functional VPX, then a couple things to know. And I just share these anecdotal stories for the sake of the listeners who haven't been on site tours. I've been on site tours in brand new Jeeps, and that company subsequently went bankrupt. And when I got to site, there was way too many brand new Jeeps. Now, looking back, I could say everybody should not have had a brand new Jeep. On this site tour with an older, mature, and I say crusty as a compliment, Geo, who's seen it. You know who I'm talking about. It's actually not an insult. It's like no nonsense. And when he didn't like a question I asked, he's like, "What do you mean by that?" And he's like, "What do you mean are this?" I said, "Well, I own shares in your company, so I talk about it like I'm an owner." He's like, "Okay, thank you for explaining that." And we got in a truck, and the truck, like, I don't think all of the cylinders were firing, and it was just caked in dirt, like take two, I'm exaggerating, but take two wash cycles to get all the dirt out of your clothes just from sitting in the truck, because it's like half cushion, half sand that you're sitting on. So it was that type of thing, and going up the mountain track, and then we were slipping in 2x. I'm like, "Hey, does Old Faithful have 4x? You might want to put it into 4. I got a truck too. You might want to put it into 4x. He's like, "No, I don't like to put it into 4x. We're going to get up this hill in 2x. And so you see that, but you're talking to the Geos and the VPXs who do have some experience, like operating these projects and so forth. But one of the things that stood out to me was the value of the asset they had in their heads and what they wanted to do with it as people who are into industry, love geology, love exploration, love dealing with the earth, the rocks, versus what I think it's really valued at in the market. There was a differential there between their perception of what this is worth and what it's worth when you actually compare it to other assets and how they're being priced in the market. So like that was a huge takeaway. Another thing I gained on the site tour, Brian, was going into the nearby town with a fellow investor and friend on the trip. And we were going in like the hobby stores and just some of the stores, and you just go in and you just see what the community is all about. And then the person I was with was I was like, what is he doing? So I had to walk back when he didn't come out of the store in like 10 minutes. And he's talking to the owner of the store, and they're talking about the local mining company and the CEO. And then I joined the conversation, and you're able to get what the locals perceive about that company and perceive about the leader. And so it was just really refreshing to hear that ground floor intel. And that guy had some perspective. He's like, oh yeah, they used to mine this thing before, and I knew a bunch of people. They came here to work, and then when they shut it down, they all lost their jobs. They had no thought for all of these workers. And I walk out of there, I'm like, this guy surely doesn't understand that mining is a boom-bust business, and he's not holding the miners responsible for the $150K a year they were making when they were employed. Maybe put some of that away for a rainy day because you're in a boom-bust cycle. So those are just some of the intel points that you would never get from a presentation. You wouldn't get from a Zoom meeting with management, but that's part of the value in site tours. And I guess that's a pitch for your video series, Field Notes, in that part of your goal is to bring people to experience some of what you see when you're on a site tour, right?
Absolutely. And I think actually this latest one that we filmed in Newfoundland, it's exactly that. The Beaver Peninsula has a rich history of mining, one that unfortunately over the last probably about 5 years has really tailed back, with the Ming mine going on care and maintenance, with, Anaconda Mine shutting down Pine Cove or Point Roos, and the other kind of stories in the sector not getting to that production scale. So community involvement, community connection was something that is so evident. And you're absolutely right on that being a key point that, again, not like the general guy out there, unfortunately, doesn't get a glimpse of unless they're in that community where the mining project is, and then they can sort of gauge it for themselves. Question for you, Bill. So whether it's social media, the amount of information, the amount of opinions that are out there, there's a plethora. And I think for investors that are trying to navigate that, maybe you can offer your opinion on just that, on how to navigate it, anonymous accounts, what you would be looking for in terms of the information or the opinions to sort of absorb, and maybe the ones to maybe avoid or ask more questions about.
So I think the first point of advice would be, whatever information you hear, including this show, in terms of social media or podcasts, that should just be something that piques your interest to do more due diligence. Like, I know you nor would I at this point ever buy something just because even somebody I know recommended it, or because somebody on social media says it's a hot stock. So that goes back to personal responsibility. Use that to investigate more. And what I categorize that under, in terms of what I call the igniters that actually move a stock upward, one of them is marketing and awareness. So I kind of categorize that in my brain when I see a bunch of chatter about a company in terms of this is marketing, this is awareness. And then I do my own valuation calculation. And so I say, how much of that marketing awareness, that chatter, has influenced the share price yet? In other words, am I getting a good entry point? And what happens if there's no real value that's created from this point, and that marketing and that chatter, it fizzles out? That share price likely will drop. So that's initially how I view those things, Brian. And then I further categorize it. And over our many years of conversations, you've helped me develop these categorizations. When there's certain marketing campaigns or marketing groups, I know who's associated with who. Yeah. So I often know the real movers, now I do, behind a certain story and the voices that they choose to use on the internet. So I guess I'm definitely not an insider, but I've developed more of that perspective over the years. I don't just view those things superficially. I don't view them naively. It could be a good idea, but then I'm going to just use that as a starting point to do my own research.
Oh, those are great points. I think I'll take this opportunity to talk. Our last conversation, there was a discussion around Ascot and sort of how that played out, and some feedback I got from one of my mentors and friends after, and he sort of corrected me in terms of, he said that, they were crooks. And so you take that for whatever you want. I wasn't that close to it. And maybe it also is a lesson for me in terms of
they're being sued. We should say there's a class action lawsuit against management.
And that's
former management.
And that's what we were talking about. And I was kind of giving an opinion based on like a very, like, I'd never done any research on them besides the certain things that I've heard. And so I should have been really clear that, and although to some degree, I think I was, but very clear when I don't necessarily have a concrete opinion on it. It was just my perception of what I saw from afar. And so it was cleared up with me that they think that they were crooks. And if they think they're crooks, I would lean towards their crooks. And so the situation is obviously more complex than I understood.
And the little feedback I got from an executive when I mentioned Ariana Resources and how much they were having to pay, like over $2 million a month in land holding fees to be in Ecuador. An executive who is dealing in Ecuador explained to me as feedback for that show that, well, Bill, you have to understand that they were basically gobbling up so much land and not doing anything with it in terms of real exploration. So from the government's perspective, they're only going to get tax dollars if you discover something, develop it, and then eventually mine it. So they want people to be working on the ground, not just possessing this land. So it was basically an incentive. Do something with this land you've acquired. Otherwise, we're going to put such punitive fees on you that you're going to let it go. And perhaps somebody else will come in and try to do something so that we can get tax revenue in the future. So thank you for that feedback. And, and that's great feedback. You have an idea, somebody in your network hears it, and they explain to you what's really going on. Brian, any further thoughts? We're about in an hour. Any further thoughts you'd like to chat about?
No, I think that's pretty good. I think it's just people should enjoy the bull market while it's here, and sort of what we've been harping on. I think you do have to have some sort of plan to take profits. And either you're taking this money out of the sector to put into real things that improve your life, or you're looking for that next place where the market is headed. And even the caveat still here is like taking profits doesn't mean you're giving up on precious metals. That's not what it means. It just means you're taking some money off the table to ensure that you've got some cash or you've got something to come back to whenever this thing does fizzle out. And, the longer you're in this business, the more I think you're going to be touched with the notion that is very sound advice or a prudent way to work your way through the junior resource sector.
And my final thoughts are congratulations on all the profits that you've probably been making if you're listening to this show in the junior gold stocks and even the junior miners across many metals. But just a friendly reminder, you're not as smart as you think you are. And with those profits and those gains in your account, I want you to think about this. This is what a friend told me when I made a lot of money real quickly in junior mining stocks in the 2021 time period. He's like, Bill, remember how, because he knew me going back decades. He said, I remember how hard you were working when you weren't making any money. And I remember how hard you worked when you started to have a little success in business. And the amount of numbers you're throwing out to me right now, just remember how many years of your life, even a decade, it would have taken you to make that number that you made in a month in your junior mining stock portfolio. So that stuck with me, and I throw that out to you to just value what you have now. If you're sitting on a lot of profits, these opportunities come in waves, they come in cycles, but you have to understand even the value of what you currently have right now if you're sitting on profits. And you could say, well, you guys are like encouraging us to just sell and exit. No, we're not necessarily. We're telling you to take responsibility for your decisions. Perhaps it would be wise to do that, but at least have an explanation for why your portfolio is performing the way it is. Brian, any further thoughts on that, or should we just call it a wrap?
No, that's good, I think.
All right. Thank you for listening to our monthly Junior Mining Insights chat, and we'll catch you in about 30 days.